Now, I like the Bitcoin treasury model. MicroStrategy is really the blue chip of that, and MicroStrategy is a granny shot ETF in the granny shot ETF. And because it's big enough now to be included on the major indices like the NASDAQ 100. But what makes MicroStrategy attractive is that he's accumulated enough Bitcoin. He's accumulated almost 600,000. That is so much Bitcoin that he has what I call a sovereign put, meaning if the US government ever wants to create a Bitcoin reserve, well, they can either try to buy 1 million Bitcoin in the open market, or they'll buy MicroStrategy at a huge premium. So there's no way MicroStrategy should ever trade at net asset value.
Tom Lee begins by pointing to one of the year's biggest market surprises, the sharp decline brought on by unanticipated concerns about a rate hike and conflicting economic data in early 2025. As headlines screamed recession fears and key indexes fell precipitously in a matter of weeks, investors became alarmed. While many sold at a loss, Lee and his FundStrat team took a different approach. Sharp corrections like these often pave the way for powerful rebounds when sentiment shifts and fundamentals reassert themselves, they said, advising clients to remain steady. Prior to delving further into Tom Lee's predictions for equities, Bitcoin, and the macro environment as a whole, if you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
You really should learn to be patient. The biggest, most recent lesson is what happened from February to April. Like this year, we had a black swan with tariffs. Yeah. I mean, it caught everybody off sides and off guard, and we had basically a mass liquidation of the stock market, waterfall decline. And we gave very unpopular advice to our FundStrat clients, which is don't do anything because it's going to be a V-shaped recovery. We said every waterfall decline is a symmetric bounce. Yeah. And we had so many people saying, yeah, it might have worked in 2022, it might have worked in 2020, but it's not going to work this time because the Fed's not behind your back. And we said it won't matter. And so a lot of people liquidated, but guess what? We had a V-shaped bounce without the Fed. I think there's two things to keep in mind. One, there's plenty of precedent for treasury companies in the historical stock market world, whether it's master limited partnerships, but it's also like the energy industry, like a commodity industry. ExxonMobil was for 25 years, the largest or the top 5 largest company in the S&P 500 for a single generation. Like you could have been born, like graduated high school at 20, and by the time you're 50, the biggest stock in the market was still Exxon, okay? It was never valued off earnings. It was always valued as a multiple of its reserve of oil, and it never traded at the value of its oil. It always traded at a multiple higher. And so that means in the market dictionary, if equity investors believe a treasury company has the right management team in place and the right capabilities to raise and grow the value of the crypto held per share to go up, it should always trade at a premium to its net asset value. That's what MicroStrategy has proven. Mm-hmm. But if someone's just saying, I'm going to put Bitcoin on my balance sheet, I should get my stock price go up, that's never going to work because that doesn't create that ability and the attractiveness, which I described earlier about why treasury companies are attractive. Like can they lower their cost of financing to grow their coin holdings per share? And if they can't, it should trade at NAV. So I think the bifurcation you're highlighting is the market's conclusion that not everyone's going to be able to achieve that, which has been a very successful IPO, and it's been the most successful IPO like in the last few years, and it's crypto. I mean, crypto has been one of the best equities and now the best IPOs. But Circle trades at around 100 times EBITDA. So, a 1%, yield, you might say, or a 1%, EBITDA yield. I mean, it's a pretty sizable multiple. But stable coins really operate off a layer 1. So, a lot of Circle operates off Ethereum. And if you look at the tech stack, typically, the more you get into that layer 1, sort of level, the higher the multiple should be for the business because it actually benefits from the multiple applications sitting on top of it.
Yeah. No, that's a good point.
So then if you... Sorry. So on that same metric, Ethereum should have a staking yield. The yield should, if the enterprise, Ethereum should have a much higher multiple. And so I asked that to Sean Farrell. He said, if you do the rough math, that you get Ethereum would be very undervalued if you were looking at Circle relative to layer 1. So that's why Ethereum probably could go to 10,000 or something if the world suddenly realized we're going to tokenize more things, and like these tokenized assets like tokenized dollars trade at 100 times EBITDA, what should the blockchain be valued at? So then suddenly ETH should maybe be worth a lot more money. Now the ETH treasury models, and there aren't that many. There's a couple out there, including the one that was announced yesterday. There's a bit of an advantage of a Ethereum treasury company if you directly compared it to a Bitcoin treasury. Mm-hmm. One is that there is a yield you can earn on Ethereum by staking. So you actually can grow your Ethereum per share from that income activity. The second is that Ethereum's delivered volatility, so it's a measure of how much it moves, is actually twice that of Bitcoin. So in theory, if someone had looked at it as like a capital markets access, like following MicroStrategy's model of trying to earn more crypto per share, well, Ethereum's volatility actually makes it cheaper to fund purchases. So because the higher the volatility you have, the more you can sell volatility and then lower your cost of borrowing. And the third is, of course, that because it's a staking token, a treasury company actually can also act as an operating business on the network itself. And that's important because that ties back to something I'm originally thinking about, which is that as more things in the financial world and real world become tokenized, then financial institutions like Goldman and JP Morgan and Amazon, Walmart, as they do stablecoins, are also going to want to stake Ethereum itself. So we're essentially doing the underlying architecture of what other businesses will actually do. So we're essentially getting in front of what other businesses will do.
According to Tom Lee, although stablecoin transactions are handled via blockchains such as Tron, the majority of these transactions take place outside of U.S. rules. In contrast, Ethereum is more attractive to institutions due to its numerous U.S.-based operations and validators. According to him, businesses such as Robinhood are already preparing to tokenize private businesses in the future. Blockchains that are safe, programmable, and regulatory compliant are required to accomplish this, and Ethereum is now at the forefront of all three. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
Now, I like the Bitcoin treasury model. MicroStrategy is really the blue chip of that, and MicroStrategy is a granny shot ETF in the granny shot ETF. And because it's big enough now to be included on the major indices like the NASDAQ 100. But what makes MicroStrategy attractive is that he's accumulated enough Bitcoin. He's accumulated almost 600,000. That is so much Bitcoin that he has what I call a sovereign put, meaning if the U.S. government ever wants to create a Bitcoin reserve, well, they can either try to buy 1 million Bitcoin in the open market, or they'll buy MicroStrategy at a huge premium. So there's no way MicroStrategy should ever trade at net asset value. And then because of the volatility of Bitcoin, MicroStrategy in turn can use the capital markets to raise money at much reduced cost. Like if he held Bitcoin, it'd be very expensive for him to borrow money to buy more Bitcoin. So if you own MicroStrategy, he's working to give you more Bitcoin per share every day, and actually at a efficient cost. So over time, you're owning more Bitcoin, so you benefit from the Bitcoin going up, plus he's getting you more Bitcoin per share. Ethereum has a vibrant and active community that's working every day to kind of create and improve it. And there are, it's a smart contract platform. And so to me, Ethereum might have actually languished and lacked innovation for some period of time. And that's really what, that was behind the fact that Ethereum sort of hadn't moved much. But I think that the fact that there's now tokenization taking place of real financial assets, and you saw with Robinhood the idea that they're going to be tokenizing a lot of things, including private companies. I think that there is going to be a real look back at the layer one networks that offer a lot of utility with smart contract, but they're secure because they're actually US based, or a lot of the validation takes place in the US. And so that's why I think Ethereum really stands to benefit. I know that there are other chains that have a lot of stablecoins such as Tron, but one of the challenges, of course, is that that a lot of the activity on that takes outside the purview of the US. Yeah, I mean, he was correct. I think what you're referring to is that there was a date where there was a registration statement effective. And then someone had written like, I think the crypto world is not really used to SEC filing. So then they see this registration statement, and then someone like Roadstar, like, oh, everyone's dumping their shares. And I think in crypto, that's common because they would call that a rug pull. They're like, oh, there's a rug pull about to happen. And but I think that's you're right. Over time, people learn different behaviors. I mean, I would say the most successful crypto traders actually are quite gifted, and they actually do quite well trading equities.
Tom Lee discusses how he believes MicroStrategy is at the forefront of this paradigm and how he likes the concept of businesses keeping Bitcoin as part of their treasury strategy. He refers to MicroStrategy as the blue chip of Bitcoin treasuries due to its substantial holdings of almost 600,000 Bitcoins. According to Lee, MicroStrategy has what he refers to as a sovereign put because of this sizable holding. Put another way, the US government would either have to purchase enormous quantities of Bitcoin from the open market, which would be extremely challenging, or they could just purchase MicroStrategy at a significant premium to obtain that Bitcoin fast if they ever wish to accumulate a sizable Bitcoin reserve. Additionally, he claims that MicroStrategy has grown to such a size that it is now a part of important indices, such as the NASDAQ 100, which enhances its legitimacy. MicroStrategy is able to raise funds at a significantly lower cost than if it were a typical Bitcoin holding company due to its size and the way it handles its Bitcoin. Because MicroStrategy effectively increases its Bitcoin per share, Lee thinks this method is excellent for investors. As an investor, you profit from the rising value of Bitcoin, as well as from owning a business that gradually adds more Bitcoin. Lee argues that although Ethereum has a vibrant community that is constantly working to improve it, it went through a phase where it wasn't doing much in terms of innovation. Blockchains that are safe, programmable, and compliant with US rules will become increasingly crucial as tokenization gains traction, as evidenced by Robinhood's plans to tokenize private enterprises. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.